In 2026, oil sits inside a tense geopolitical map. Middle East conflict risk, sanctions and supply routes that markets mostly price as background noise. The last time energy stopped being background noise and reset an entire decade. October 1973. This is that archive. This is an archive of the 1973 to 1980 oil shocks. Documented price and economic data only. Not a forecast, not investment advice. Chapter 1. The Age of Cheap Oil. For the post-war decades, oil was abundant and cheap, around $3 a barrel. Western economies were built on the assumption that energy was effectively unlimited. The United States had been the world's swing producer and price setter. By the early 1970s, that had changed. US oil production peaked, imports rose, and pricing power shifted to the OPEC cartel, the oil-exporting nations who now held the marginal barrel. Chapter 2. October 1973. On the 6th of October 1973, the Yom Kippur War began. In response to Western support for Israel, the Arab members of OPEC announced an embargo, cutting production and halting exports to the United States and its allies. The price response was violent and fast. 4x, oil price, roughly $3 to $12 a barrel. Petrol stations ran dry. The United States introduced rationing with odd and even number plate days. The image of the decade became queues of cars waiting at the pump, in the country that had defined cheap motoring. Chapter 3. The macro shock. The oil shock broke the prevailing economic model. Inflation and unemployment rose together. Stagflation, which the dominant theory of the time said should not be possible. Higher energy prices fed into everything at once. US consumer inflation reached around 11% in 1974. Stock markets fell hard. The Dow lost roughly 45% across the 1973 to 74 bear market as the real economy contracted. Chapter 4. The Second Shock. Just as economies adjusted, the 1979 Iranian Revolution removed Iranian supply from the market. A second oil shock followed, and the price doubled again, peaking near $40 a barrel in 1980. Two shocks in one decade entrenched high inflation expectations, the same expectations the Volcker Federal Reserve then had to break with 20% interest rates. Chapter 5. The Structural Legacy. The shocks reshaped the system permanently. Nations built strategic petroleum reserves. Fuel efficiency standards arrived. Investment poured into non-OPEC supply, the North Sea, Alaska, which eventually weakened the cartel's grip, and petrodollar recycling deepened. Oil revenues flowed back into US Treasury markets, tying global energy trade to the dollar in a way that outlasted the crisis itself. Chapter 6. The Pattern. The pattern the record shows. 1. An economy assumes cheap energy is permanent. 2. A supply shock meets that assumption head-on. 3. Stagflation, inflation and recession together. 4. Structural change reshapes supply for decades after. This archive does not predict whether current energy tensions will produce a comparable shock. It documents what happened the last time a supply shock met an economy that assumed cheap energy was permanent. The archive stays open. This is what the historical record shows.